Good morning, good afternoon, or good evening, depending on where in the world you're at. My name is Nick Ezzo, and welcome to Major Gifts, delivering the highest ROI through major fundraising programs. Let's get started with a little bit of housekeeping here. There will be a copy of this slide presentation distributed upon completion of the webinar, as well as a replay of this webcast. So in case you were wondering, bear with us, and we're going to send around a replay as well as the slides as soon as we're done. Let's go ahead and get started. Equilar, the company that I work for, was founded in 2000. Executive compensation data and benchmarking. We've got over 1,200 corporate clients, and our data has been referenced by the New York Times, Bloomberg, and if you may have seen it just this very week, the Wall Street Journal. What do we do? Well, let's talk about tapping Equilar's data on high net worth individuals. What Equilar does for both nonprofits, universities, as well as wealth managers and corporations is we take public disclosures like proxy statements, the DEF 14A, 10Ks, Form 4s, and 8Ks, all kinds of rich and valuable SEC filings, and we bring them into our system and we help you make sense of them, and we deliver this information to you in a very easily digestible, consumable format. We announced a product a year ago called Equilar Atlas, and in the last year we've sold this product, and we've helped universities and nonprofits and wealth managers to find and identify high net worth individuals to get donations, increase their endowment, increase their net worth, and also to help people find companies and candidates for board and executive positions. In the university space, we've helped universities like Villanova and also smaller regional colleges such as Gustavus Adolphus and others to increase their endowment by identifying and finding high net worth individuals. So let's go ahead and get started. Enough about our company. Let's talk about your company or your organization. Let's talk about achieving campaign goals. So normally when I give this presentation in front of an audience, I'll ask for a show of hands. You can feel free to raise your hand at your desk right now if you're watching this webcast, but is there anybody here who's planning a capital campaign? If you ask yourself that question, I'm sure the answer will be yes. You know, lots of organizations, universities and nonprofits alike have also perhaps just finished one. And I'm sure there are people here on the call who use major gifts and major gift functions for annual giving. If you've answered yes to any of those questions, then you're well ahead of the game. What I'd like to tell you about is how you can use Equilar Atlas or tools like Atlas to execute capital campaigns in a smarter and more effective way. For example, so we've been talking with USC, who recently launched in August of last year the largest capital campaign in history, $6 billion capital campaign to increase the size of their endowment. And so organizations like USC and others who are on this call today are well aware of the impact that major gifts can have. Some of the types of major gifts that people have told us about in our one-on-one and seminars. For example, people give away their real estate. They donate their luxury yachts. They donate all kinds of goods. They donate, for example, horses. We've had all kinds of interesting and unique non-cash gifts that have increased the endowment of nonprofits and universities. One of the things I'd like to talk to you about today is the practice of using equity and donating equity in order to take this wealth and actually do some good with it. A couple reasons why it's interesting about donating equity. First of all, there's a huge tax advantage to donating equity as opposed to donating cash. If somebody receives an equity grant, stock option, restricted stock unit, and that vests over a period of time, they can exercise that stock and go ahead and donate it directly to an organization, a qualified nonprofit like a university or other nonprofit. And because they didn't actually sell it, they don't have to pay capital gains on it. The receiving organization, if it's a qualified nonprofit, doesn't have to pay capital gains. That means the full amount of the equity is realized by the organization that receives the gift. So said another way, if you vest your equity and donate it to a nonprofit, you don't pay the taxes, they don't pay the taxes, and the full amount of that grant goes to the receiving party. Secondly, psychologically, people treat their bonuses and equity holdings different than cash. They spend and they donate more freely if it's a piece of paper that is a stock or a stock option versus an actual greenback. So people are more willing and able to give with their equity instead of with their cash. So why focus on major gifts? I'm going to talk to you about 3 studies that we have discussed quite a bit around the table here at Equilar. First of all, the 2011 Bank of America study of high net worth philanthropy is the latest of a series of in-depth annual studies on high net worth philanthropy. What they found was that high net worth households, meaning those with incomes greater than $200,000 or assets in excess of $1 million, represent about 3% of total U.S. households. However, this very small number of households is responsible for approximately 2/3 of all household charity in this country. I'll say that again. 3% of U.S. households are responsible for 2/3 of household giving in this country. That's an incredible number. The second study, conducted by the Development Department of UCLA on its fundraising campaign activities from 1995 to 2005, found that donors giving $1 million or more represented about 74% of total campaign giving. So that almost 3/4 of all campaign giving was done by donors giving $1 million or more. Donors giving $25,000 or more represented a whopping 93% of total campaign giving. So it's not my opinion. It's studies from, for example, the University of Southern California, Los Angeles. Major gift programs work, and they are driving a large number of grants and donations. Third study that we've looked at recently is from the Chronicle of Philanthropy. And the quote there that came out of that was, "Fueling the drive is increasing stratification in private school giving, with more of the money coming from a smaller group of contributors. Fundraisers and school heads say that the old rule of thumb that 20% of parents gave 80% of donations is now more like 10 to 90 or even 5 to 95. So again, 3 different independent studies have said that the number of major gifts and the number of major donors is becoming a more and more important part of the fundraising activities at universities and nonprofits. Individual donations are huge. 2 facts here that I'd like to share with you. Nearly 75% of all donations come from individuals, as you can see in this pie chart. Second highest number of donations come from foundations, and at the end of the presentation I'll talk to you about some of the techniques that we've used for connecting with foundations. But back to individuals, it's staggering. 3 out of 4 donations come from individuals. 2/3 of individual donations come from 3% of the population. So more and more we're getting to the point where we need to find who these folks are who have the money, who are the high net worth individuals who want to donate and who want to give money to charitable organizations, and establishing relationships with those people well in advance of those stocks and stock options and restricted stock units coming available. By the way, this statistic in this pie chart came to us from Giving USA Foundation. So the opportunity next year in 2013 is also huge, and I'm going to share with you some specific stats that you might find interesting. Q1 is a very, very big quarter for donations. Why is that, you might ask? Well, in most companies, they look at the end of the year performance of executives and employees, and they provide a reward at the end of the year. That reward in the form of equity is normally given in Q1. So you can see here by this graph, $6.4 billion will become available in Q1. Equity that is given in Q1 is typically vesting in Q1. So grants that were given a year ago, if it's a 4-year vesting period, 25% of the value of that is available in Q1. If you look at Q2, Q3, and Q4, you're looking at another 2.8, 2.0, and $1.9 billion coming. I did a quick scan of the attendees of this particular webinar, and I found there are a few people on the call, a few universities and nonprofits. Appalachian University, who's on the call here, has an alumnus from who is currently the Senior Vice President, Specialty Business Unit at Centene. He's, as an example, investing $587.8 thousand in Q1 of next year. University of Portland, who's also on this webcast, they have a Senior Vice President, one of their alumni serving a Senior Vice President of Corporate Development at Cormark Holding, will be investing $171.6 thousand in Q1. And finally, Michigan State University, who's on the call today, they have a Senior Vice President and General Manager at Regeneron Pharmaceuticals. He's a Michigan State alum. He'll be investing $4 million in the first quarter of next year. Those are some real-life examples that I logged into Equilar Atlas during this webcast and pulled up some information and found that out. So it's, Q1 is a big time for vesting. All right, so the second quarter that's interesting for vesting is Q4. Most gifts are given, most donations are given in Q4. And that is because, for many people, they want to realize the tax benefit of year-end equity gifts. Back to the couple of slides ago, people who donate their equity get a full tax break write-off versus capital gains tax. And we're seeing a lot more, $13 billion worth of equity vesting in 2013. About the same number in 2012. This is from 2008 and 2009, if you remember, when the stock market was depressed and executives received large amounts of their compensation in the form of equity, stock options, restricted stock units. There are three segments that we want to target, and you're going to want to target each one of these. But the efforts on all three need to be done in concert with one another to be successful. You've got your annual campaign supporters, you've got your board of directors, your board of trustees that you can leverage, and of course you've got new prospects, people who you're trying to go after. And I'm going to show you how to find the money, find the people, and find the opportunities across all three of these segments. Let's check out a quote here from Wendy McGrady, Giving USA Foundation again. If you don't look to your annual fund donors for major gifts, you're going to miss out. So it couldn't be said any plainer than that. I'll give you a quick anecdote about one of our clients at Equilar, a large university in the western part of the United States. They had an alumnus who regularly gave at the level of about $100, $200 a year. As part of their regular practice of engaging with their alumni and donors, they paid a visit to this individual in his or her home or business, and when the person went out there, the representative from the University Foundation, it appeared that this person was a pretty successful business person and had a lot more capacity to give than they were currently engaging. The representative from the foundation, the University Foundation, went back to their development office, pulled up the person's name and information in Equilar Atlas, and realized that that particular alumnus was going to be vesting about $6 million in the next 6 months. So immediately the university escalated that particular donor onto the president's list, and that person was then slated for a callback from the university president, who would then ask, can I count on your support in our capital campaign? This anecdote is a true story, and it's actually quite powerful because you can't always tell at face value when those envelopes are coming in what somebody's capacity to give is. You need hard data. What Equilar Atlas and what our company does is we take that hard data from the SEC, the filings that nobody wants to go through, and we bring that into our product in an easy-to-use format so that you can just click, find your alumni, rank them, put them on lists where you can then engage with them in the most appropriate manner. The other story that people often tell is when you go to ask somebody for a donation and you don't know what the number is that they're willing to give. You don't know what their capacity to give is. If somebody's willing to give $10,000 and you ask for $1,000, they'll readily give that. Where do I sign the check? Where do I write the check to? And you may leave that meeting thinking I should have asked for more. If you ask for $100,000 and their capacity to give is only $10,000, well, then you've overshot the mark, and they may not give anything at all. So it's important to have the data at your fingertips about what somebody's giving capacity is. There are many different factors in giving capacity, and my point here is that one of those factors should be the upcoming equity vesting and the upcoming wealth that those people will be enjoying. So let me ask you a question. This is hypothetical, of course, because it's a webinar, and you can raise your hand if you like, but what is more valuable, net worth or network? Your network, in this sense, is your board's network, your board of directors, your board of trustees. So you have a number of people who are highly influential people in your community. They are connected to other highly influential people within their communities. In order to get to these people, you have to know how they're connected. One of the things that we do, again, by having 10 years of executive compensation data, is that we know who has worked with whom, who has sat on boards with whom, and what years overlap between those individuals. So we have a pretty good idea of what we call the LinkedIn of the rich and famous, Equilar Atlas. 300,000 executives and board members worldwide, and we can tell how they're all interconnected. So if you're having a fundraiser for your nonprofit or university, and you ask a friend, one of your trustees, hey, bring a wealthy friend, bring a wealthy business colleague, they may do nothing. But when you ask the specific question, bring Casey Johnson, the CFO at XYZ Corporation, that's a specific ask, and that person is much more likely to bring Casey Johnson. And by the way, we know that this person, Casey Johnson, for example, sold $1.8 million of equity last week. So we know others are going to be asking her for donations. We can ask Mary or ask Casey as well before she gets hit up by other people. So how do you find your board's network? How do you leverage your board's network? Equilar Atlas, we sometimes refer to as the LinkedIn of the rich and famous. Facebook has 900 million users and growing. LinkedIn has 160 million users and growing. Equilar Atlas is an elite group of 300,000 of the most influential executives and board members worldwide. These people, in many cases, as you'll see, are not on social media, and you don't know how to reach them. We can show you, using their board connections and their executive connections, how to get to the right people. So over 80% of our executive database is not in LinkedIn. The people who are in Equilar Atlas are not in LinkedIn. And if you do find them in LinkedIn, it may not even be their profile. It may be a curated profile that's controlled by their marketing department for PR and awareness purposes, or by their investor relations group. The ones we link to, the people who are in LinkedIn, we actually link to their profile in Equilar Atlas. But top executives are typically not on social media. 74% of the S&P 500 are not in LinkedIn, as opposed to 26% who are. Conversely, 100% of the S&P 500 CEOs are in Equilar Atlas. So I said I'd come back to foundations, and before we get into questions, I've got a couple more slides to go over with you. Foundations are the second largest source of donations, representing 14% of that pie chart from earlier. After individuals, it's the second largest source of donations. So some people who are on this webinar, some of you may be actually applying for foundation grants right now. Foundation grants easily identified. You can go to GuideStar, Foundation Center, corporate websites will steer you to mission statements, qualifications, application deadlines, and so forth. But there's a lot of competition for these dollars because they are so easily identifiable. One way to get a leg up and to help secure foundation thing is to get support from people you know within corporations, corporate insiders, who can make sure your proposal is given the amount of attention and consideration appropriate for your proposal. While foundation screening committees are separate from the corporate boardroom, they communicate, and if your board members, corporate supporters, champion your proposal, you may be more successful in securing the corporate funding and getting that foundation grant that you're seeking. Last but not least, let's talk about uncovering new prospects, and then we'll get into some Q&A. So a recent UCLA campaign, 2/3 of their individual donations came from non-alumni. University in the Midwest, come from not their alumni, but from the community in which the college, the university exists. People who are supporters of the university, businesses, and residents around the community, they contribute to the endowment of the university as well. So for nonprofits, you don't have alumni. All you have are prospects. It's very important to find the right people. For universities, you have your alumni, but don't neglect the new prospects that are located right around you. So at this point, I know we've spent about 20 minutes going over this. I'd like to open up the chat line here for some questions, and we have had a few come in. One question that somebody had is, how do you capture information from SEC filings, and how often do you update it? Good question. We get that one a lot. So at Equilar, we have a dedicated team of researchers here who conduct all the data collection analysis. It's not done by machines. It's done by people. We bring the data in from the SEC filings, and we look at it, we interpret it, we read the footnotes, and we bring it into our database and categorize it appropriately. What this does is it allows us to get more detailed and accurate information. If you were to look at Equilar Atlas and click on somebody's name and their equity holdings, it would drill down. Each link would go right to the original source, the SEC filing, the Form 4, and so on, that actually shows you the amounts, the dates, and the specifics about that particular equity grant. So you can easily view and verify the form from the original source. So to answer the second part of the question, how often do we update our data? Our data is updated daily. Every time a Form 4 or an 8K or 10K comes in, it gets updated, and our system, our database, is immediately updated in real time. Let's go to another question. Can Equilar Atlas show me if a high net worth individual has donated before? Unlike other donation databases, we don't look at what people have done in the past. We don't look at their donation activities. You can pull a list of all board members or trustees at educational nonprofits, or who sit on the board of symphonies or art museums. So in a way, we can, if people are active on boards, you can find out who those people are, and you can connect to their network. For anybody who wasn't on the beginning of the webcast, another question here, we get this a lot: can I get a copy of this presentation? Yes, you can. We will send it around at the end of this session, the slides, as well as a webinar replay. So any other questions that have come in, we will reply back to you in email as quick as we can. I don't think I'll have time to go through it today on the call, but we will send those emails around and get your questions answered. All right, the last thing I'd like to leave you with is I would like to, number one, thank everybody for showing up here today, and number two, invite you to go ahead and try out the application. We've got a free limited version of Equilar Atlas that's available. It takes a second or two to log in. All you have to do is provide a few pieces of information, and you're off and running. You can find out if Equilar Atlas can help you with your fundraising goals. Through our conversations with our prospects and clients, we figured out that the only way that we can tell if somebody's going to benefit from the application is for them to get in and start using it. So I would invite you to go to equilar.com/atlas, sign in, and you can do all kinds of advanced searches on your alumni, your trustees. You can search by title, by company, by name. You can do advanced searches based on who's coming into money in the first quarter, in the second quarter, how much money they're going to be coming into, all kinds of advanced searches. So once again, check out equilar.com/atlas. Choose sign up and get started with your free limited version of Atlas. My name is Nick Esdo. I'm the VP of Marketing here at Equilar. On behalf of the entire firm, I'd like to thank everyone for showing up today, and I hope you enjoy the rest of your day. Thanks.